I think we have Amisha Vora of Prabhudas Lilladher now joining in on the show. Amisha, thank you very much. Good to have you here. So, I mean, what we are seeing now, it's kind of difficult to differentiate how much of this is with regards to the demonetization impact that I was just talking about 2 minutes back, and how much of this is global in nature. Because you have pretty sharp moves. Dollar, the US 10-year Treasury yield. How much is local, how much is global, Amisha?
As what you very rightly said, it is difficult to differentiate, but I would still think that a large part is still global. As what you can very evidently see from what's been really happening to a number of other emerging markets, their currencies and their indices. So I would still say that today's move, or maybe to that extent yesterday's move, both were globally linked rather than for demonetization. One thing is very clear, that demonetization will definitely lead to downward revision of earnings for one minimum or 2 quarters for sure. The critical question is that whether markets and global funds will overlook that pain of 2 quarters and see the macro benefits, or in the meantime, even globally the volatility is high because of all the known and unknown reasons, and markets will succumb. So I think that the question is, for next 1 or 2 quarters, how do we really migrate or adjust to the new thing, which is either the new US president or the Fed rate policy or the demonetization game and otherwise. And I think beyond that also, the adjustment to GST by the trade, by the business, will also create a bit of uncertainty, and we need to really wait and watch whether in the process, though long term it is very good, is it going to lead to any hiccups in doing the day-to-day business. But as far as demonetization is concerned, we all know on a very macro basis, it's positive.
Okay. Amisha, are you worried about loans against property as a portfolio for a lot of NBFCs, where asset quality concerns could rise, as well as real estate companies where, say, maybe 2 to 3 quarters down the line, because they feel this cash crunch, we could see NPAs rise from that sector as well for banks?
Couple of things here. I would say that, a good part of large metro construction or real estate was any which way slow. The buying in some of these large metros were housing funded, so good part was in white. But at the same time, at land level, there was huge amount of usage of both kind of money. At the permission levels, there was huge amount of usage of both kind of money. And of course, non-metro, it was all easy to use whatever currency you wanted to use. So I don't think that on a very large company, for the larger companies, there will be such a big issue. But a number of companies have specific portfolios where they've been lending to the non-metro guys only on a focused way. I think that there could be repayment issues for sure for next 2 quarters, and beyond that, if property prices remain sluggish, your cover may come down. Some such issues would arise, but repayment across an SME level, not large company, which any which way under a little problem and they were managing, will be more.
Housing finance companies, how do you think this is likely to impact? You speak to companies and you get usually the standard line that, obviously CEOs would like to look beyond, and maybe rightly so, a quarter, 2 quarters. But I mean, your analysts at Prabhudas, what are they saying? Are the prospects for housing finance companies in particular because of this?
Once again, you'll have to distinguish, frankly, between an HDFC, which is largely to that salaried class, they don't go below or beyond, and their whole business model was low cost of funds and also giving it at lower rate. So their risk is much lesser as compared to a lot of others, which is into NBFC space, who have sprung into a model where they rather lend to those people who are below the radar of the banks and HDFC. I think there the repayment issues would spring up.
Okay. All right, fair enough, Amisha. We're going to leave it on that note. Thank you very much for joining in and taking the time out and speaking with us. Well.